Hi there, Shingirai here again with another update on portfolio performance over the past week. On a 1 week basis, 9 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from minus 55 basis points up to 14 basis points in the positive for CBAM portfolios number 1 and 5 respectively. In a risk-off move, investors ran away to safe haven assets such as gold, as tensions escalated in Eastern Europe, and that would see 91 global gold up 5.50%, alongside a comeback in performance from iShares Clean Energy up 2.97%, amid stories of some loosening of tensions in Eastern Europe. And then we also saw Schroders US smaller companies giving some market cap premium there, up 2.24%. In terms of detractors from performance, we did mention earlier that Baillie Gifford European equity has been under pressure as tensions begin to reach a simmering or boiling point really in Eastern Europe on the border of Ukraine and Russia, as they reach a standoff in the story of whether Ukraine would be willing to withdraw their application to join NATO forces, and that would see Baillie Gifford European down 2.42%, alongside some weakness there from USD corporate bonds and JP Morgan Japan equity down more than 1.65%. But on the week again, we did see positive return from broader emerging markets led by China, no doubt, and some small and mid-cap US exposure also doing well on a 1 week basis. On a quarter-to-date basis, all 10 of the CBAM portfolios underperformed their respective benchmarks on a relatively risk-off year-to-date period, where CBAM 5v2 would return minus 6.42%, whilst 1v2 would return minus 4.23%. The UK equity market has been attractive from a valuation point of view, going back as far as the Brexit days, back in 2016, and that's beginning to pay off for longer term holders of the UK equity market, and that would see the LNG 100 up 2.82% on a quarter-to-date basis, alongside iShares Physical Gold up 1.72%, and then LNG emerging markets up 0.623%, largely driven by a rebound in Chinese equity. In terms of detractions from performance, we did mention earlier the tensions in Eastern Europe had reached a boiling point, and that would see Europe being one of our bottom performers on a year-to-date basis, and that would be done 19.62%, alongside peers in Japanese equity, where we've seen the Japanese economy be a bit more sluggish in terms of GDP recovery in a post-pandemic environment, and that would see Japanese equity, hedged and unhedged, both down more than 18%, in a time where we're recently reading reports that Japan is currently struggling with another outbreak of the COVID-19 pandemic.